It would be great if you could just walk into a car dealership, pick out a new car, and have all the cash on hand to pay for the car outright. Sounds great, right? But if you're like most people, you'll need a loan to buy that car. However, when it comes to auto loan financing, you may not know what your options are or which are the best lenders for you. Hi there, I'm Amanda Mushro, and at autoinsurance.com, we'll help you decide whether to finance your car or not. And if you do finance, we'll give you tips to get the best rates on your loan. So here's some reasons you should finance. You don't have enough cash to buy a safe and reliable car. You're looking to build your credit. Taking out a loan and making payments on time is a great way to establish and raise your credit score. If interest rates are low, it may be worth it to finance your car. Interest rates can range from under 1% to over 35%. The monthly payments work with your budget. You should not finance if you have the cash on hand and you're not worried about depleting your savings. The price of the car is too high and it will be a struggle to make the monthly payments. Instead, you may want to look for a less expensive car that you can afford, whether you pay upfront or with loans. If you only qualify for a long-term loan, which is anything over 84 months, because over time, you'll end up paying a lot more in interest. If interest rates are high and you don't have great credit. But if financing is the way to a new car for you, here's what you need to know. You can get a loan from a traditional bank, a credit union, an online lender, or the car dealership, but each has their own pros and cons. So let's talk about those. First up is bank financing. You can get an auto loan through your bank or a bank that you don't currently have an account with. With bank financing, you can get pre-approved for multiple loans from multiple banks, so you can compare rates. The pros of bank financing are that people with good credit can get low interest rates from banks. However, a con is that not all banks will finance all cars. Some won't finance old cars or cars with a lot of miles. Next up are credit unions. These are nonprofit organizations that can provide auto loans. A pro for credit unions is that they offer lower interest rates than banks, even if you have poor credit. And in some cases, they offer lower fees. As for the cons, credit unions don't offer many of the services that banks offer, like convenient mobile apps and online banking. Another option is an online lender financing. The pros of this service is that online lenders make it really easy to compare rates and they can cover those with subprime credit. If you have good credit, you could get lower interest rates from online lenders than from banks. However, for the cons, those with bad credit may get higher interest rates. Also, customer service could be questionable, so check the company's reviews on the Better Business Bureau, Yelp, and other customer review sites. You can also finance your car through the car dealership where you are purchasing your vehicle. Dealer financing works in a few different ways. The first is dealer arranged. This is where a dealer connects you with lending partners such as a bank, and they act as the middleman. While this is convenient because you don't have to find a lender, you won't be able to compare rates from different lenders. So you could end up paying a higher interest rate than necessary. Plus, the dealer might charge a fee. Next is captive finance. This is when car manufacturers offer in-house auto loans. So for example, Ford and GM have financing divisions that provide their customers with auto loans. Captive auto loans offer great promotions like 0% APR. However, you may only be able to benefit from these great promotions if you have strong credit. So it's not a good choice for those with subprime credit, which includes everyone with a credit score up to 600. Also, there is buy here, pay here. It's similar to captive finance. Buy here, pay here means that you sign up for your auto loan through the car dealership, making the auto dealer and the lender one and the same. The lender will put a device on your car so that they can disable or locate it if you don't pay the loan. This option is good for those with subprime credit, but those loans often have the highest interest rates and fees. So clearly there are a lot of different ways to finance a vehicle. But remember, not all loans are created equal. If you don't qualify for an auto loan because of your subprime credit, or maybe you don't want to shell out the money for a down payment, an alternative to buying a car is leasing a car, meaning you pay to use it for a certain period of time or a number of miles. With leasing, monthly payments will be lower than an auto loan payment. However, you'll have to return the car when the lease is up, unless the dealership lets you buy it. Getting a car loan is only the first step of the car owning process. Next, you'll need auto insurance. So head over to autoinsurance.com. It's linked in the description, and you'll find lots of information about finding the right provider and policy for you. Also, be sure to like and subscribe to our channel. We upload and post new videos every week.